Taylor the GOAT. How do I get on this podcast of yours?
I don't like to be beaten at all. Michael Jordan, Kobe kind of mentality, Mamba mentality. It's funny, people think that I built my business quickly. I didn't at all. I specialize in apartment sales. There's so many things that are constantly changing with multifamily. There's so many nuances and things change constantly. Regulations.
The governor signed a package of 32 housing bills that aim to streamline housing, address homelessness, and strengthen penalties.
New buyers, new sellers, new motivations. I'm gonna do whatever it takes to try to close a deal. Everything I've always done, I just wanna be the best at. Welcome to episode number 12 of the podcast. This is a solo episode because I promised everyone that I would be posting an episode every single week. We have a lapse in our filming schedule. Usually I'm interviewing fantastic real estate owners and operators. I reached out to my Instagram and asked them to ask me some questions for today's episode. So we're going to be going over some of those questions today. Some of them real estate related, a ton of them about my journey as a broker and kind of how I started in the business, my schedule, day in the life, things like that. So if you're interested in understanding myself, my journey, what it looks like from the beginning, in the very beginning when I started in 2018 till today, kind of what my schedule looks like and what I'm focusing on, maybe even a little bit how I got into the business. There's some inappropriate questions in here that I may or may not ask myself and answer for you guys too. And I appreciate everyone asking me. But long story short, if you want to go and ask me questions for the next solo episode, go check me out on Instagram. It's just Taylor Avakian. But today we're going to be diving in. And so I hope you guys enjoyed this one. If you like this format, let me know. I might be able to do more of these. I'll be honest with you. It's tough. Talking to a camera and talking to no one is a little bit harder than speaking to someone else. So let's get into it. And we're going to tackle the first question, which today someone asked me, basically, what does your day in the life look like as Taylor Avakian, the commercial real estate multifamily extraordinaire? So I'm going to start you off from the beginning when I started in the business in 2018. This schedule that I had back when I started was completely different. Well, slightly different from where it is today. But in any case, it was absolutely insane. And it's kind of fun to look back and see what I was doing at that time because I don't necessarily recommend it to anyone. But if anyone's like me, I think you'll resonate with this schedule. So let's take you back to 2018. I come in, rookie, fresh-faced, know nothing about real estate besides a couple of real estate finance courses that I took in college. So we get there and I remember our CEO sitting us down and saying, hey, if this isn't the most important thing in your life, then you shouldn't be here. And I'm a Rocky, Michael Jordan, Kobe kind of mentality, Mamba mentality. I love that kind of rah, that gets me going. And so I don't know if he knew that was what I needed to hear, but it was what I needed to hear. So he said, this is the $1 million agent schedule. Here's what it looks like. You get in at 6 a.m. and you leave at 8. And then he broke down what you do in between there. And the basis of it was make 500 cold calls a day, try to present 2 proposals a week and go on 2 meetings a week. And if you do that, you'll be $1 million agent. And so he was a lot smarter than me. So I figured I would listen to him from that perspective, a lot wealthier than me and been doing it in the business. So I said, okay, I can do that. So I remember the first day getting in there at like 6 o'clock and there was already someone in there, another agent who was in the office before me. And if you know anything about me, I don't like to be beaten at all. Highly competitive, grew up playing sports. The fact that someone was in the office before me really ticked me off. And so I told myself, all right, the next day, let's get in about 15 minutes earlier. So I get in there 5:45 the following day, and I'm waking up at like 4 o'clock, something like that, getting a little workout in and then getting to the gym. So get in at 5:45. He's there. Okay, all right, here we go. Time to play ball. Let's see how far I can push this thing. So I ended up pushing my wake up time to 3:50 in the morning. And I got a little workout, maybe 30 minutes. So I'd be done around 5:15. Then I'd shower, get to the office, which was a couple miles away. 5:30. I beat him in at 5:30. Great. He gets in at like 5:40. He notices me in there before him. And we go back and forth a little bit. Oh, sleeping in, aren't we? Yeah. So that was the little competitive nature that we had. The next day, of course, he beats me in. And this goes on until I think at one point, one of us, I definitely won. I'll be honest with you, because again, I'm a little bit insane when it comes to this kind of stuff. I ended up getting in for like 2 weeks straight at 5:15 in the morning, and no, before 5, like 4:50 in the morning at one point, and it was just absurd. And for the longest time, my schedule was wake up, work out 30 minutes, shower, get to the office 5:15. I did that for a very long time, and it was absolutely insane, and I don't recommend it to anyone. And I would stay till 7, 8, 8:30 sometimes. I like to go to bed at like 9 o'clock. It was just work 24/7, 7 days a week. I literally would work from Sunday to Sunday, every day. And that really hasn't changed much, but that was my schedule. And so I'll walk you through a little bit about what the day went. Like, what are you doing at 5 a.m. in the office? I used to get that a lot. So if you don't know brokerage, a lot of it is you eat what you kill. So if I don't close a deal, I don't get paid. I'm a 1099 independent contractor, which means that the only way that I make money is if I close a deal. So that beginning stages, when I was first starting out, I really didn't know what to do in the beginning. It was a lot of research, trying to study the market, figuring out what is going to be happening, who I'm calling for the day, where the leads are, studying some of the sales comps, things like that, like admin stuff. Maybe if I had a BOV, I'd work on a BOV here and there. But I really didn't have much to do besides cold call people. And I took that to the extreme. So I'll tell you a little story. I think I was 2 or 3 months in and was still on this insane schedule. And I got in really early and I didn't have anything to do. Literally, I felt like I don't want to study the comps right now. Like, I've been doing this every day. I kind of know what's going on. I feel pretty confident about the market. I have my leads list who I'm calling today. I'm not going to start calling them before 8 o'clock, 8:39. What am I going to do for 3 hours? And so I had the bright idea of pulling up CoStar and, going to a part of the country that was awake at 6 in the morning. That happened to be New York City. Pulled up CoStar and I sorted by multifamily properties, and I started calling multifamily owners in New York City. And mind you, I'm a multifamily broker in Los Angeles. I sell apartment buildings. I have no idea about anything that goes on in New York City. I don't know any of the comps. I don't know anything about New York. And it was that bravado. I think that was that level of like, I'm going to do whatever it takes to try to close a deal, even if that's called New York City, which again, we'll dive into that a little bit later, but that is not a good strategy at all. It is not a good strategy, but nonetheless, I ended up calling New York. I got a couple people on the phone. They told me I'm not selling, which is fair enough. And I told my senior at the time, I said, hey, I called New York City this morning. I spoke to a couple people, didn't really get any leads, but whatever. And he goes, wait, what did you do? You called New York City? What the fuck are you doing, man? And I said, what? I'm trying to dig up some deals. He said, don't do that again. So I didn't. But long story short, that was kind of my mentality in the beginning. It was do whatever I needed to do to make deals happen. And it was continuous. And so typical, we'll get back into the schedule again. So 9 a.m., 8:30, 9 a.m. rolls around. I'm calling owners. I had a list of 1,500, 2,000 owners that I was just calling. Hey, do you have any interest in selling? This was from 9 a.m. to really like 4, 5, 6 p.m. And then if I had a BOV, maybe I'd stop around 5, 6. But I would call until I got to 100 plus cold calls a day. Like that was my goal. I had to call 100 owners, leave a voicemail or speak to someone, 100 of those a day. And we didn't have like a sequential dialer or anything that this new technology nowadays. I was clicking and it was dialing and I was leaving voicemails, every single person. So it took a long time. And that was my schedule for probably the first 18 months of the business, maybe 2 years. And I still love cold calling. So I call from 9 to 11 a.m. today. But in the beginning, it was just the only way that I knew how to dig up business was on the phones. Had no other skills, had no other attributes. had no track record to really lean on. Was calling a new area that my senior hadn't done any transactions in, so I couldn't lean on his reputation there. So it was really one of, let's just try to dig up as many opportunities as we can. And that's what the schedule looked like for probably the first 2-3 years of me in the business. And as I got more listings and deals, obviously the calls, I try to keep them at 500 a week, to be completely honest with you. I did do that, but it became more, okay, now I got to go on meetings here. Now I got to do a little research. I got more BOVs that I got to underwrite, studying the market a little bit more, doing research on contacts, owners, things like that. So that was the daily schedule from the beginning. Now let's go till today. What does my schedule look like today? I will forewarn you, this is what I do. This is not what you need to do. This is not what a ton of successful brokers do. This is just what I do currently today. And I don't know if it's the best way to do it. It's probably not the best way to do it, but this is what I do. So my alarm is set for 4:35 a.m. in the morning. I like to work out before I go to work. So Monday, Wednesday, Friday, I go to the gym. I get there around 5-ish, 5:05-ish. I work out from 5 to 5:45, weights, stuff like that. I should start running again, but I don't. Then my gym is in my office building. And so I shower at the gym, and then I come up to the office around 6:15-ish. And from 6 to 8 o'clock in the morning, I'm reading my emails. I'm going through some news. I'm trying to understand what's going on in the market. I'm responding to all the emails that I missed last night. If I said, hey, we're going to send you over some deals late last night, I'll send people over some deals. I'll look through maybe what I missed the previous day, kind of write out my schedule and what I need to get done today. And I do that until about 8:30. Then from 8:39-ish, I start calling, and I call from about 9 to 11. And most of these are either cold calls. Nowadays, it's more of just following up with people because I've been doing this for so long. I think I calculated it once because I have these sheets that if you can see in the video, these are like cold call sheets, and they used to look different previously, but I track every single call. And so if my numbers are correct, and I have a lot of these sheets, I've made over 100,000 cold calls in my career. That's a lot of cold calls, but I just love doing it. So anyways, I call people from 9 to 11. From 11 to 12, those are pretty much follow-up calls, maybe 11:30 to 12, answering some emails, things like that, getting back to people who, during my call period, which I block out, I cancel my email, do all that stuff. I respond to the emails that I missed. Maybe if I missed a call, someone called my cell phone, I'll call them back, things like that, follow-ups. From 12 to 1, I'm eating lunch / at my desk, figuring out what else needs to be done, maybe responding to some more emails, seeing what my meeting schedule looks like for the rest of the week, who I should be focusing on, trying to think about specific deals that I'm trying to get done, how I can get those done, or who the right buyer is and how we're negotiating those things. It's a lot of mental stuff. Then if I don't have meetings, which I would prefer the afternoon be in-person meetings, lunch meetings, BOV pitch meetings, proposal meetings, things like that. Some networking later in the evening, but let's just say I don't have any of those. I'm calling. I'm calling again, and I'm calling until 4 or 5 p.m. And that's what I do every day. And then from 5 to 6, 7-ish, I'll do BOVs, underwriting, some social media content writing, things like that. And that's my schedule. That is what I do almost 5 days a week for sure. And the weekends are a little bit different, but that's just working on the business most of the time, which is like, what AI tool can I start implementing to make my life easier, which probably isn't the best use case of my time, but it's what I do anyways. And so that's what my schedule has looked like from day to day. I'd actually love to know what your guys' schedules are. If you know me, or in the comments, you can actually put it in the comments here. Like, what does your schedule look like? I don't know what other people's schedules look like, but I'd love to know it. If I'm missing some things, or I could improve on some things, which is another blessing and a curse that I have. I'm always looking to improve, and sometimes that can bite me in the butt, but I'm a lazy, hardworking person. And so I like to figure out, is there an easier way for me to do what I'm trying to do right now? All right, let's get to the next question. How hard should rookies work their first 2 years? time to come in, on the phones, character, etc. I think I kind of answered that. As hard as you can, like work as much as you can. There shouldn't be, and I agree with what my CEO said, there shouldn't be anything else that's more important in your life than the business, at least in the beginning. Now, again, I don't think that the way that I did the business those first 2 years is something that is sustainable and will lead to a good life. Like if you do that forever, probably not going to be the most important thing. But if you sacrifice, quote unquote, 2 years, 2.5 years to just do that, like you will thank yourself because that compounds. If you're working 12, 14, 15 hours a day, you're basically working double what every other person is working. So you get 4 years of experience in 2, and it just leads to better opportunities. You're creating your own luck, which I'm a big fan of. I always say, or someone said it once, it sounded really smart to me, like you create your own luck. You put yourself in opportunities to get lucky. And so for me, just the amount of sheer work that I was willing to do, because I didn't have any other redeeming skills, to be honest with you, that's how I created my own luck. So that's what I would say. Work as hard as you possibly can and see what happens. All right, next question. How you built your business so quick? It's funny. People think that I built my business quickly. I didn't at all. I closed my first deal 12 months into the business. And for most people, they would say that's average. But for the amount that I was working, that's not average at all. There were many other agents in the office, some who did different product types, but some who were doing multifamily that got listings and closings within the first 12 months. And I didn't. And it was very frustrating. And there were many conversations that I had with my mentor at the time. I'm like, dude, what am I doing wrong? What do I need to improve on? I need to practice my pitch skills. Am I not sniffing out the ball? What's going on here? And I would just beat myself up over and over. And they say comparison is the thief of joy. It really is, because I was just eating myself alive and it sucked. It really did. But I will say that I used that lack of success early on as fuel. That's what got me in the office so early. That's what made it easier to stay late. That's what pushed me to come in on the weekends and just grind it out, because I wasn't succeeding. And I hated not being successful in what I was doing, because that was everything that I've always done. I just want to be the best at it. And that's a flaw / I don't know, benefit, I guess you could say. But I wanted to be the best. And so I just kept pushing at it, and it really didn't click until about the end of year 2. Like I did a couple deals, 4 or 5 in year 2, but year 3 was when things started taking off. And I think year 3 we did 12 or 13 deals, and year 4 was like 16 or 17, and big deals. I think year 4 I did $70 million worth of sales, which was the most at the time. I think definitely the most that I had done in a long time, and the most for multifamily in the office. And that's what kind of, I think, people started taking notice. So it was not quick. It was long. It was very, very long. And there's still parts of my business today that I'm trying to improve, because it hasn't been an upward trajectory the whole time. Like I've not eclipsed what I did in 2022, which is frustrating. It's very frustrating, but it's part of the business. It's part of the market. It's part of finding ways for me to get better and improve at what I do, which is this brokerage thing, and me constantly iterating and trying to find out, how can I build a better mousetrap? How can I be more efficient with my time? How can I serve my clients better, build more rapport, and allow myself to be the best goddamn broker that has ever existed inside of me? The best that I can be, which for me is always the best ever. But if that happens, great. If it doesn't, great. I'm just going to try to keep pushing and doing what I can, because that's all I can control. And I'm fortunate to know you can only control what you can control. So I try to only do those things. All right. Let's see. Okay, let's talk about niches in real estate. Niches. Niche. Niche. I specialize in apartment sales. Apartment sales and land for apartments. That's it. And really only in Southern California. I don't sell retail. I don't sell industrial. I don't sell office. I don't sell anything else. And the reason that I only focus on multifamily is because I still don't know everything about multifamily. There's so many nuances and things change constantly, regulations, new buyers, new sellers, new motivations. There's so many things that are constantly changing with multifamily that if I tried to do everything, I couldn't do anything because you're just spreading yourself too thin. You only have so many hours in the day. And even when you're working 15, 16, 17 hours in the day, like you have to focus. And so for me, specializing and niching down in multifamily, and even if you want to go further in like Koreatown, which is my bread and butter historically, is where I started. If there was enough transaction volume in Koreatown and the 1,500 owners that I knew, I would only call those 1,500 owners and be their best friend and be the go-to guy for Koreatown. Like if you wanted to sell a property in Koreatown, there's only one choice that you have. It would be me, right? That's what I would do if specifically there was only if there was enough volume in Koreatown for me to do that. It's a little bit harder, a little more nuanced. So I spread it out a little bit, but the basis of that is it takes a very long time to know everyone and get in touch with everyone and have the owners know your name. And if you're just constantly that guy who's, your billboard, this is an example, steak or a metaphor, something like that. The guys who have the billboards called Jacob, like I know that called Jacob guy everywhere because he's in Los Angeles. I don't see his signs in other locations. He's focused on Southern California. Same kind of thing. You want everyone to know your name in a specific area because it's not about you calling a person at the right time and them saying, I want to sell. They think about selling and the first person that comes to their mind is you. And so I would highly suggest that if you are going to be doing any sort of sales role, that you niche down specifically and dominate, which to me, dominate is like 30% of a market. You dominate that market. So for niching down, and even on the investment front, if you're an investor, like have a specific kind of building or location or area that you specialize in, because you're going to build the economies of scale for the management. You're going to know what kind of fixtures and finishes. You're going to know the market rate rents because you just know that product type, that market so well that if anyone else is going to come and try to buy that building, they're not going to be able to compete with you. You can make a lot of money doing that. I've seen a ton of owners and investors make a ton of money just specializing in one asset class. Like there's an investor who just does these 1920s buildings in like this one little pocket of LA. That's it. And his rents are 15, 20% higher than everyone else's. It's because he's specialized in that product type and he's so good and he's known for that. And tenants want to live in those kind of buildings. He's identified that and he's made that his specialty. So I say, whatever you're doing, investing and or selling, niche down, make yourself a specialist. And so everyone knows that you're that guy or gal, you're X person. When you get that label, it's actually a good thing. It's a very good thing when you're in the investment and sales world because it's highly competitive, very highly competitive. All right, what's next? What's your advice for someone looking to make their first real estate investment? I'm going to take this from the approach of a broker, or in another term, relationships with brokers. Because if you're going to go into any market, you're going to need relationships with the brokers who are actually doing deals, because you're going to want them to send you deals before they hit the market or when they have an off-market deal. And so what I would do if I was first starting out and wanting to build relationships with brokers is I would try to call all of them, cold call, right? Get their email. It should be all public information. Tell them, this is me. Here's the money that I'm having. Here's what I'm looking to invest in. Give them your buy box exactly. And just be like brokers are to owners. Follow up, check in, take them out to coffee, build the relationships, schmooze a little bit. No broker doesn't like going golfing, or no broker doesn't like getting taken out to lunch. going to the shooting range, whatever it is. It's just building the relationships. You got to look at it as your clients are the brokers, and you got to do whatever you got to do to build the relationships with those brokers and those quote unquote clients to make sure that you're known as the guy who gets the deals. Now, let's say you do get a deal done and you're in the comps, right? I would make sure that all of the brokers know that you just closed this deal, hear the metrics of the deal, and call them and ask their advice. Brokers love giving advice. Hey, just bought this deal. What do you think market rents are in this little pocket? Like, what are you seeing happening over here? Do you think it was a good purchase? Like, just start asking them questions and having them spit out their knowledge, make them look really smart, because brokers love seeming smart. We love seeming smart. And if you make us feel like we're really smart, we're going to love you. I'll tell you that firsthand. Giving us opportunities. Hey, I got this deal. Like, what do you think about it? If you're looking at other deals, get their opinion on pricing. Like, you're building a relationship with these brokers almost as if they're a confidant or a consultant, and you're bringing them into your world and working on this, building this portfolio together. And that's a huge thing that I try to do from the other side. And if I was to go and start investing, I would do the same thing, because I know what I like. I know the clients that I like to set deals to first, and they're the ones who treat me like I'm almost on their team. Like, they want my advice. They seek my advice. They're looking for my expertise. And that makes me feel good. And that makes me want to reciprocate and send them deals. So I would say, if you're a first-time investor, again, build relationships with brokers. Know your market like the back of your hand, but hopefully that goes without saying. But just build those relationships. All right, let's talk about 2025. We're going to go into a little bit about where the market is and where I see it going. So this is for all the people who are actively investing or looking to invest in Los Angeles. I'll give you a little insight into my opinion, where I think it's headed, and how you can kind of take advantage of it. So 2025, to give you an answer on that, let's look back in the last 2 years. There's been a ton of turmoil and uncertainty regarding Los Angeles multifamily. First of all, we had one of the craziest run-ups of interest rates any investor's seen in 50, 60 years. That was a black swan event in terms of no one thought that it was going to go up as fast as it did. It went from 0 to basically, 5-6%. And so the last 2 years have been one of, wow, okay, where's market pricing? Where can I start underwriting these deals? What is someone willing to pay for it? And there was a disconnect for a certain period of time. I feel like now in 2025, now that we know who the president is, we know that certain regulations did not pass, Prop 33 to be one of them, which was a big uncertainty level from a local perspective here in Los Angeles. People were unsure if that did pass, what it was going to do to property values, like it did in New York, which at the time I think was 30% property values dropped. So fortunately, that did not happen. Now that the Fed has said that they're going to most likely reduce the rates, people think that prices are going to increase. They're going to increase a little bit because interest rates are still in the high 5s, low 6s. But if we get more rate cuts, because inflation seems to be tamed, it's looking like prices are going to be going up. What that also means is there's still this period that the seller's expectations and where the actual market makes sense for buyers, it actually inverts, which means you can get a very good yield going in, a good cap rate going in. So you could buy a 5.5, 6 cap deal where you get an interest rate at 5.5%. You're positively leveraged. That has not happened in Los Angeles for a very, very long time. I mean, in 2021, 2022, it was when rates were 0. Maybe you were getting positively leveraged, but it was for a short period. We haven't seen positively leveraged deals day one for a long time. And so what that means is when you can get a 5.5% interest rate deal and a 6% cap rate, and you can increase the rents, add value in whatever way you can to say a 7.5, but you can sell it for a 6 cap or 5.5 if we're lucky, you get a huge spread. And so what I'm anticipating is that a ton of people over the next 12 months who are actively buying in Los Angeles are going to find those deals, and they're going to make a ton of money. And if I was investing my own money in Los Angeles, I would go try to find the worst building in the best neighborhood at the best basis, which means the lowest price per unit, price per square foot. And if the cap rate's, in the fives, okay. But if I can see a path to get to a 6, 7, 8% cap rate eventually, 3-4 years down the road, and I know that my building's basis is going to be in line with where other properties have traded for in that area, I feel very comfortable about making that investment because rents are going to continue to go up. They're not building enough properties here to keep up with the demand of rentals and units. And so I think Los Angeles is going to be a rent constrained market for the foreseeable future, which means that your rents are going to be good. You're going to be safe in terms of your rents not coming down. And I think that's a great move if you're looking to invest in 2025, is going and trying to find better B areas, the cheapest property there, even if you pay a little bit more on a price per unit comparative to other neighborhoods in Los Angeles, buy the cheapest price per pound for that location with a decent yield going in, and you're going to do just fine. That's what I would do. That's how I'm looking and telling clients that I work with, hey, here's the strategy that I would be doing. What do you think? Does this align with your investment goals? And we're going out there and trying to find opportunities like that. I also think that ADUs are going to be a huge play with SB 1211, which was a new regulation that just passed. Basically, if you have 8 units, you can build 8 ADUs on that property. If you have more, you can build more, but you can build up to 8 ADUs on most properties in Los Angeles if they're zoned for zoned for multifamily, so R2 and above. And that's going to be incredibly lucrative for people who can build those ADUs for, $250, $300 a square foot. And the rent income they're going to get from that is going to be, $2,000 a unit. Like, it's a significant value add, which the cost makes sense in most areas to build those ADUs. So I think that's going to be a huge play. I think you're going to see a lot of investors going towards ADUs, especially with rent regulations and laws and things like that. So that's what we're going to be pitching. That's what we're going to be trying to do in terms of the brokerage side, unlocking value in potential ADUs that previously was unable to be unlocked. So I think savvy investors are looking for ways to unlock value, as any smart real estate investor is going to do. They're going to look for those things that the arbitrage, what piece of information do they know that other owners don't? And right now it seems to be the ADUs is the big one. Not that other owners don't know about it, but they're just not looking for it. They're not looking for existing buildings that, actually, I can build ground up ADUs in the back or in this parking lot, or previously I could build 2 ADUs, but now I'm going to build 8 on this site. That's a huge value unlock. So I see 2025 people going out that way and really trying to maximize their land value and maximize what they can do with the properties in today's market. All right. So to wrap it up, this was a shorter episode, but I hope you guys enjoyed it. All right, so let's wrap this up. I appreciate you guys for listening. Thanks for listening to me ramble about my schedule and my day and 2025 and the outlook and all that fun stuff. If you like this kind of podcast episode format style, let me know. I could definitely do a better job of organizing these questions and trying to talk through it. I'm getting better, so stick with me on this. And again, I'm thankful and grateful for everyone who's tuned in and joined thus far. Overall, the podcast has gotten over 15,000 impressions, views, plays across all the platforms, which is just so incredible. Like, I can't believe that 15,000 people have watched or listened to these episodes. It just kind of blows my mind. So I'm looking forward to continuing this. we're still going to be doing one episode every week. So tune in, hit that like button or subscribe, I guess. Rate this 5 stars if you enjoyed the podcast thus far. Let me know what other people you think you'd like to be on the podcast episode. I'm actively looking for investors, real estate people, Los Angeles business entrepreneurs, people like that who are in the real estate space to come in and share some knowledge with you guys. So if you have any specific people or genres of people that you think you'd like to see on the show, let me know. And thanks for joining and listening to the podcast. And we're looking forward to continuing this in 2025. My goal is 52 episodes in 2025, one a week continuously. So let's see what we can do with that. And yeah, thanks.